Before you could stay with us, I am Pious Kojo Backah. Straight to our very first story. Government has made what it describes as a significant progress with domestic debt exchange program to encouraging banks to fully participate in the program. This is because the Association of Banks has agreed to sign the deal subject to the proposed terms. There is more in the following reports.
The proposals that have been put on the table that will result in the commercial banks participating in this deal includes government agreeing to offer 5% as coupon payment for 2023. Government has also agreed that it will offer 9% coupon payment on the 12 new bonds that will be issued by the Finance Ministry. Another significant move that has been proposed by the state will eventually result in the commercial banks participating in the deal is that government has agreed to remove all clauses in the exchange memorandum that empowers the Republic to vary the terms in the exchange program in the future. The Ghana Association of Bankers was, however, quick to add that the agreement that it will reach with government is, however, subject to the approval of individual bank shareholders and their board of directors. Or for some, since the commercial banks were the main reason for the extension of the domestic debt exchange program, government can be said to have made some significant progress in getting a very important stakeholder in participating in this domestic debt exchange program.
All right, so let's stay a while longer on this developing story. Joining us via Zoom is a senior lecturer at the Department of Finance at the University of Cape Coast, Siriam Kawo, for his perspective on this joint statement issued by the Ministry of Finance and the Ghana Bankers Association. Great for Mr. Siriam Kawo, you could join us on the marketplace. Now, first off, we saw this happen yesterday by way of the release issued by the Ministry of Finance plus the Ghana Bankers Association. Your initial thoughts?
Thank you very much. It's welcoming news to that the Bank of Ghana, the Ministry of and the Association of Ghana have up to how they're going to do with the debt exchange. Looking at what is happening in the market and having agreed that the terms of the previous debt exchange will be varied, where instead of 0 coupon, we now have 5% coupon and then 9% coupon rate over the life of bonds is good. Now, having zero. But when you look at the current rates that these bonds are enjoying, 19.2% as compared to 5% and 9%, the investors will have a lot of reduction if they have planned that they are going to get these monies over a period of time. And that will feature into the other companies, savings and loans companies, who have had a lot of fixed deposit invested based on their estimate. Have to go back to their and try to do what we have.
You seem to have concerns about the coupon rate of 19.2%, which you've highlighted, which you believe is extremely high.
The coupon rate over the at that point in time, who rate and those who are taking part in it is the rate for the at time, especially bond that we've issued on the market, was not up to 5%. And so if the rates are very high, 19.2%, that tells us there is a risk involved in the amount that the bondholders are going to earn. And this is what we are paying for now, because it's not sustainable. It is something they look at. If we were looking at of 5%, 9%, for the and looking at the sum of money involved in it, we would have been in a better position now.
Don't you think this could probably be the present circumstances we find ourselves in, for which reason they have to go that tangent?
Yes, that is why and if it's very high, you buy a bond and then the payback on the bond is trade. Some of them you could have recouped your initial investment before the bond. That is very. We are now coming back to do the right thing that also the government can also use it and get on it and pay over the life. If you look at how much government is going for from the World Bank, we're going to borrow, the highest we can pay is about 3%. So if you are from somewhere at 3% and another one you are borrowing at 19%, it does not really correlate and link up with each other. And so it's good for us that we are trying to work things out to ensure that we have a good and sustainable debt levels. Of course, this is going to be a worrying situation for the external debt holders, because once there is negotiation in the domestic market, it means that government will have to push the external debt holders to ensure that they also agree on some substantial reduction on their coupon rate, so that we can meet the debt sustainability level. We've always been saying it is a game that all the parties are involved, government and then the holders, including those in the banking, savings and loan center, insurance and the rest. It is time for all the parties to sit down on the negotiation table and agree on the way forward. As if we are all holding onto our chest and throwing our weights around, the system crash, everybody is going to be a loser. And the institutions are going to be the biggest losers at the end of the day. And so we need to take actions to mitigate the harshness of the decisions that will be taken, so that the individuals will not be at the receiving end.
All right, so one interesting part of the statement issued says that the banks would have to look at their governance structure. What happens if they don't? Any repercussions? That
is a huge question we need to ask. Because if they are going to look at their governance structure, and the governance structure they are supposed to vote, and they pull out of the deal that they are not going to agree to debt exchange, then the government will have to now go and do different sets of negotiation, as we see in the individual bondholders case. And so that aspect of the statement needs to be clarified. And I'm sure the Bankers Association were represented by the MDs, and all of them have agreed on this. And some of these things will be formalities. Otherwise, if we leave out to them, the deal might not be assessed at the end of the period.
Mr. Kawa, I would like you to hold on for me, as we've been joined by Pious Kojo Backah, who is the Executive Secretary of the Association of Savings and Loans, for his perspective as well on this developing story. Mr. Backah, grateful you could join us on the marketplace. Now, we have seen some developments in the financial sector this year as Ghana pursues an IMF program. First, how is your association positioning itself to stay strong and take advantage of all that is happening in the financial sector?
Okay. Hello and good afternoon to your viewers this afternoon. Happy New Year to everyone. This arrangement is something that the whole nation is involved in. And for that matter, it is not only one institution that has to deal with it. If you take, for instance, the savings and loans companies, we have always been preparing ourselves in terms of governance, in terms of risk management, in terms of liquidity and operational resilience. And so this that is happening in the space, our members continuously engage. And one key thing that is also very important is that you continue to engage with your regulator. So that, for instance, if you take a look at the regulatory reliefs that the central bank has issued out for those in the bond who will take part, it's something that we've always had this kind of discussions with the regulator. And so as for the savings and loans companies, we will continue to collaborate with the regulator and also with government policies to make sure that we continue to deliver on our mandate to serving the customer. The ultimate beneficiary of everything we do is the customer. And so if we are able to give loans to the customer, we are able to also give their deposits to them when they come to us. That is the key thing that we have been focusing on all this while.
All right, so do you think that due to the domestic debt exchange program that has been reached with banks, it will have an impact on your operation since you also receive funding from the banks?
Okay, so let me put it this way, that savings and loans companies, they do not have direct funding from anybody, neither the central bank or the commercial banks. Of course, just like an individual will go to a commercial bank to borrow to do his business, the same way savings and loans companies also, if they need extra money, they also go to their banks to borrow. And so if the banks are able to have excess liquidity or enough liquidity in their operation, then when a savings and loans need more money in this operation and they go to them, they'll be able to get those funds. Another key thing is that I remember when this started, I spoke here and said that we should all exercise some restraint. There's no need for us to panic. And for that matter, your financial sector is a key place that if you want to build your economy, you go to. And therefore, it is a collective effort. And so when your financial sector has a challenge, every facet of your economy will be challenged. And therefore, for us, we believe in helping build the financial space, in helping contribute our quota to serving the populace and to making sure that the financial sector is resilient and strong.
Mr. Kojo Backah, were your members consulted on this debt exchange program?
I must say that you know that it is those who have the primary dealership or those who have direct dealings with the Central Depository Security. So our members were contacted through their banks because they bought this instrument through their primary dealers, i.e. the brokers and also the commercial banks. And since then, there has been consistent engagement between our institutions and their corresponding banks and their brokers to making sure that the best comes out of it. And we have seen an improvement. One thing that I'm happy about has to do with the fact that 2023, the institutions are going to receive something, even though we had wished that it was more than this. And also the issue of the various clauses that there's been an amendment to in the memorandum. We must say that going forward, what we need to focus on as a nation is to work towards getting a lower inflation rate, work towards bringing our interest rates down, because if Treasury bill interest rate is still high up there, then the net effect wouldn't be positive. And so we believe that going forward as a nation, let's work together to bring in our interest rate down, i.e. Treasury bill, government has a role to play, and also continuous engagement, which is the way forward.
Now, following the debt exchange program, investor confidence has dropped. And you indicated last year that confidence is coming back after the cleanup exercise. What has been the development so far?
So this is your assertion. And yes, you realize that some people were a bit skeptical about the whole financial sector. Obviously, because maybe some might have not understood a lot of things and there were a lot of uncertainties. However, I must say that our members are continuously working and they are able to serve their customers. And this is something that we think that we should continue to build on. And you realize that there are even more savings and loans that are going to come into the space this year. And we are expecting that we will continue to reach out to more customers, those who need short-term loans to do their businesses, to build their lives. Coming to a savings and loans company is obviously the way to go. And for us, if you look at our turnover time in granting loans, take savings and loans and finance houses, we're able to serve the public within that shortest possible time. And they are our key focus, which we believe that going into 2023, as we have started, we will keep the momentum.
Have you had new members after the cleanup exercise?
Yes, we've had one at least.
Okay.
One has joined, and we know that there's another one that is also on the way coming.
All right. Grateful, Pious Kojo Backah speaking to us on the marketplace here. Let's move away from that and touch on the story. The Association of Ghana Industries has described the level of utility tariff increments for water and electricity by the Public Utilities Regulatory Commission as too high for industry to bear, particularly at this time. It argues that though utility companies need to recover costs to sustain the operations, the effect of the utility tariffs increase could be dire for both industry and utility companies. Joining us via Zoom is Greater Accra Regional Chair for AGI, Tionam Apalu. And Tionam, grateful you could join us on the marketplace. The last time I spoke to you on this review of the utility tariffs, you did mention that you intend speaking to the Commission. What has been the progress so far?
Thank you. Good afternoon, and good afternoon to your cherished listeners. Yes, so we've been engaging the Regulatory Commission. So far, it's been pretty fruitful. Even today, we've had meetings with them, and it appears that they are fairly with us on our concerns, and they assure us that they will thoroughly look into the issues that we are raising.
Is that to say?
You recall that...
Go ahead, please.
Hello?
Go ahead and make your point.
So I'm saying that, so we're engaged, we're in touch with them, and they assure us that they will look at our concerns as we express them. And we're looking forward, for that matter, we're looking forward for a review in favor of industry.
But prior to this announcement by the Commission, were you engaged?
Well, the truth is that we, together with the Commission, have agreed that we are okay with a quarterly review of tariffs.
Okay.
So it's not at all for them to review tariff quarterly. But our concern is the rate of increase. Because if you look at power, for example, electricity, it's gone up within the past 6 months, over 56%. And that is threatening the very survival of our industries. Look at water. Water for our beverage sector, for example, has gone up by over 48% in the past 6 months. And we're saying that this clearly would make running industries in Ghana extremely difficult. And so, in the light of this, in as much as we are not against review of tariffs, we're just saying that the rates are too high, and that what we mean by review is not to come and within 6 months go by over 50%.
All right.
Generally, a review of that nature should single digit or something, So really, these are our concerns, and fortunately, they share our concerns, and we look forward that in the near future they will consider to review significantly the rates of increment.
All right, so Tionam, I want you to give me a better appreciation of what this increase means to you as an industry. Give us a reality of what it feels like. Tionam, can you hear me?
Hello?
Yes, I'm asking you to give me a feel of what this increase means to you. It seems Tionam's Palu's line has frozen, and we shall make an effort to ensure that he is back on to speak to us. I'm told he's back. So, Tionam, I was asking earlier that give us a feel of what it means when, we're seeing this increase by way of utility tariffs.
Great. So, utility costs constitute a major component of the entire production process. Power, for example, constitute about 30% of the entire production cost. So if you're increasing power within 6 months by 56%, it affects the very foundation of the survival of the business. So what happens over time is that most of our companies are unable to compete in the market, a market which has a lot of cheap imported products that so locally manufactured will have to compete with some of these products, and they are unable to compete because the rate at which we have to increase the price to be able to survive are so high. So we're saying that if industry really needs to survive, then utility tariffs has to be managed so much so that they do not affect the overall cost of production. And you see, the issue about water and our beverage companies, for example, our beverage companies rely very heavily on water to produce the drinks that they produce and so on. And so that cost is a major cost for production. And if you increase the water by 48% within 6 months, that affects the overall cost of the beverage firm. And that we're having all of these cheap beverage products being imported, they are unable to compete. So as a result, some of the folks are really closing down, or cutting down operation. Some of the workers are being laid off because they are unable to compete.
All right.
So we're saying that these are the realities that need to be dealt with. So an increment in utility, AGI is not against it. We're just saying that it has to be managed in a manner that is helpful for us as industry.
All right, so in a minute, after you made that proposal and that call to the PURC, were you given an assurance, and what was the timeline given?
Well, so we've had several favorable conversations with the Commission, very favorable. Our belief is that at least by the next review, we should definitely have a better rate for utility tariffs.
All right.
So we are looking at by the next.
Grateful, Chonam Palu, for your time here on the marketplace. And I'm told we have Seriam Kawo to complete his submission on the debt exchange program, which the Ministry of Finance, I beg your pardon, and the Ghana Association of Bankers has reached over the period. Now, Seriam, you were making a point before we let you go. Now, I just want you to sum it up for me. After listening to the association, the Savings and Loans Associations, now what becomes of the financial institution basically? They are hopeful that things will be positive. Is that how you say it?
Thank you very much. The banking sector, the financial sector is very key in the management of the economy. And there is no way we can downplay the role they play. They play a significant role in ensuring that there is flow of liquidity and linking those who have surplus funds to those who have deficit funding. They do the kind of asymmetric information by making sure that they make good loans in the system. And for that matter, if the financial sector crashes, we are in trouble. Hence, the need for all the parties to come together to ensure that the right things are done so that the loans that are given from time to time, everybody benefits from it. The debt exchange and the rest, we are all part of it. Individuals are part of it. The financial institutions are part of it. Now we must make sure that we all come together and correct the errors that we've made in the future and have a progress, have a strong and resilient financial system that will be beneficial to the country and to individuals and to the future generation.
Great. A quick one on the MPC. Let me find this from you. What are we to expect come Monday?
That's the monetary
policy committee, policy rate.
Policy committee, coming. They looking at the rate at which inflation is going, it is slowing down. And so that's a hike in the monetary policy going forward.
Great. Thank you very much. Seriam Kawo is a finance lecturer at the University of Cape Coast speaking to us there. Now, Ghana and at the center of the world will take advantage of the upcoming African Summit Agency Summit to showcase the investment potentials of the country to investors. Well, this is an assurance from the Chief Executive of the Ghana Investment Promotion Center, UFI Grant. Ghana is hosting the summit, which begins from tomorrow, to discuss the continent's investment climate. Speaking to Joy Business, UFI Grant said Africa is opening up for more investment opportunities, and Ghana, as a country, is well positioned to take advantage.
First is to create a new way of thinking for the continent. And we do agree that this is a continent with many countries at varying levels of development. But you need to get to a point where we now start looking inward and say that, okay, maybe we are not getting enough FDI onto the continent. 83 billion in 2021.
And that'll be all for the marketplace for today. I am Pious Kojo Backah. For more news, you can log on to myjoyonline.com/business. Do have a good business day.